Thank you again. Welcome for being here. Thank you for being in our webinar today. My name is Myra Medina. I'm an estate planning paralegal for the Koppenbarger and Koppenbarger law firm. Your presenters today are Robert Galliano, John Kupal, and Susan Shelley. Robert is one of the 8 attorneys within our firm. Robert has a master's in taxation and is a certified specialist in estate planning, trust, and probate law. We have the pleasure of having John Kupal, the president for the Howard Jarvis Taxpayers Association, and Susan Shelley, the vice president of communications. The Koppenbarger and Koppenbarger law firm has been in business for over 40 years. We have 8 full-time attorneys, including a CPA, along with over 35 support staff members that are highly qualified and happy to serve you. We have offices all over the state of California, 7 to be exact. Before I begin and hand it over to Robert, I'd like to remind you to type your questions in the Q&A chat, and we will do our best to have one of our panelists respond. Now I'll head it over to Robert.
Thank you, Myra. And the agenda today on this very important webinar that we're having today is the focus of this webinar is really to support the Howard Jarvis Taxpayers Association. And what I'm going to do is I'm going to reintroduce Susan Shelley. Then I'm going to talk a little bit about Prop 13 background, because we have found that if we're going to try to change something, we would like to know what the heck is it that we're changing. So a little bit of background as to where we were and also what the Prop 19 changes are, so that we're all on the same page going forward before we turn it over to Susan and John to talk about all the exciting work that they are doing. And then we will close with how we can help you. But in this session, I'm going to ask how you can help. So let me go back. The introduction of Susan Shelley. She is an unbelievable person. Susan is a vice president of communications for the Howard Jarvis Taxpayers Association, one of the most influential taxpayers advocacy groups in California. She's also a columnist and editorial writer with the Southern California News Group, 11 daily papers, including the Orange County Register and the LA Daily News. Susan's a very busy lady, and she is a frequent guest on Southern California radio and TV news and interview shows, and she's the co-host of the Howard Jarvis podcast for KABC. Now, moving on to the background about Prop 13. The background is as follows. Prior to the passing of Prop 13, what was happening in California is that home values even then were increasing, but there was no cap on property taxes. So as the value of the properties would increase, also the property taxes would increase also together. And depending on the value of the property, your property tax bill next year would be higher than the one before, and people were losing their properties. That was plain and simple. I, at this time, was working in Redondo Beach, and I saw a lot of our friends who had homes in Palos Verdes literally losing their homes because of the tax problems that existed. So in 1978, Prop 13 was passed, and that was to keep the property taxes low. And if your home value went sky high, the property taxes could not increase more than 2% per year. Generally, what they're around 1%, 1.2, 1.3, depending on the other added taxes that go with the county in which you live. But now property taxes under Prop 13, they were capped at 2% max. The tax structure under previous law was generally that if the property transferred ownership, as there was a change in ownership, then the property would be reassessed. That is what allowed then California to be able to charge more on your tax bill. So property is reassessed when there's a change in ownership. unless there is an exclusion. Now, changing ownership is simply, well, when you give property away, when you gift it, when you inherit, also when you sell it. So changing ownership can mean several things that a person does, and the property will be reassessed unless there is an exclusion, like I mentioned. Parents could, under previous law, leave their primary home of any value to their children without reassessment. Think about that. You could buy a home of maybe $200,000, and at the time that you died, the house is worth now $2 million, and you can transfer the primary home to your children with any type of reassessment. Grandparents could transfer to grandchildren also without reassessment. And in addition, California had another benefit, super benefit as far as I'm concerned, and that was that in addition to the exclusion of the primary home, each parent could leave an additional $1 million of other property, and the $1 million was assessed value of the property, not the fair market value, but the assessed value. The assessed value is what the county that will assess the property for tax purposes. It's generally less than the fair market value. So you could transfer then second homes, you could transfer rentals, as long as the cumulative number was under $1 million. Everything was done without reassessment to your children. It could be transferred, and also to your grandchildren. So, as an example, during the 1960s, if your parent bought a 1,200 square foot home in La Jolla and paid maybe $50,000, the property perhaps was reassessed at $200,000. The property taxes then would be calculated a little bit over 1% to be about $2,100 a year. And Prop 13 then, or actually Prop 58 would there's so many proposition numbers that what I elected to do was simply to say previous law, which is other, like Prop 58 and so forth, and Prop 13 and other propositions. But if you just think about previous law, meaning around Prop 13 era, then the parents could allow the children to inherit, keeping the property taxes very low. So that was before. Now, here comes Prop 19. So what did Prop 19 do? Prop 19 restricts the transfer of parent-child. They, in essence, have put in restrictions on the transfer of the primary home of the parents. The restriction on the transfer of parents' primary home, parent to child or grandparent to grandchildren, by gift or inheritance, now has several requirements and value limitation. One requirement is that the child must occupy the property as their primary residence. They must do so within 1 year and must stay permanently in the home in order to keep the lower tax bill. I meet with a lot of families, and I tell you, after all these years of practicing estate planning, I have rarely run into a child that says, "Oh, I am so looking forward to living in my grandparents' home." That generally does not happen. Other restrictions are also imposed by Prop 19, and that basically there's no reassessment on the first million increase over the assessed value as of the parent's death. Well, that's good. So the reassessment is only the value over the 1 million. But here in California, property values are increasing. So generally that 1 million exclusion, which is good, will not totally prevent a reassessment or an addition to the current tax base to occur. Here's the kicker. Do you remember that previous law allowed you to transfer up to 1 million of other properties assessed value without reassessment? That has been taken away completely. All other properties now will have the tax base increase the current value upon the parent's death. That is exactly what has happened under Prop 19. The same house in La Jolla, In 2022, the new family buys the same house in La Jolla. The property is now worth $1.5 million. The property taxes, if their home is reassessed, is close to $60,000. So think about this. An inheritance that could have been transferred with a low tax rate to children. If all of the conditions under Prop 19 are not met, then there will be a reassessment. And how about your children having to pay almost $60,000 a year going forward? Now, we are going to move into probably the heart of this presentation, and that is the speakers, Susan and John, who I see has joined us. They are the prominent individuals of the Howard Jarvis Taxpayers Association. And at this point, I am going to turn over the presentation completely to them and let them talk about their wonderful organization and how we can all help them in this fight. John, Susan, go ahead, it's all yours.
Well, thank you very much, Robert, and thank you for doing this webinar, and thank you to everybody for being here. Before we get started talking about the details of Prop 19 and what we're doing to repeal the death tax that was hidden in it, it's my great privilege to introduce you to the president of the Howard Jarvis Taxpayers Association, the most respected and influential voice on tax law and tax policy in California, Mr. John Kupal. John?
How you doing, Susan? Thank you very much, and thank you to the law firm for hosting this event. Very important issue for the Howard Jarvis Taxpayers Association. HJTA was formed the day after Prop 13 passed in June of 1978, because Howard Jarvis knew that without an organization to protect what the voters had approved, that the Prop 13 would be assailed from all sides, and it has. We've got a full-time litigation staff. I'm an attorney. I used to be with the Pacific Legal Foundation, but we have 2 other full-time lawyers, and several of our board members are also lawyers. So we're well familiar with this issue, and the real problem, as Susan will describe, and I have to apologize in advance, we actually have a campaign meeting coming up via Zoom on this very issue with our campaign team. We have a very top-notch campaign team, but I'll just go over the highlights. Prop 19 passed, and it took everyone by surprise because they never talked about losing the very important intergenerational protection, the transfer protection. They talked about wildfire, and they talked about the portability aspect of Prop 19. And by the way, there was one aspect of Prop 19 that was good, and that is the portability aspect, which is the ability to take your Prop 13 base with you to another county. We had always supported the portability aspect. However, the California Association of Realtors were told by many people in the legislature that if you wanted portability, you had to find a way to, quote, pay for it. Well, their way of paying for it was to impose a multi-billion-dollar tax increase in the form of losing the intergenerational transfer protection. So cumulatively, this is a huge, huge property tax increase. Californians have already demonstrated their hostility to estate taxes. Prop 6 in 1982 was a complete repeal of the estate tax, but it did not impact property. And so that's why they put on the ballot Proposition 58 in 1986. And interestingly enough, as divided as politics is today, in 1986, Proposition 58, which instilled the intergenerational transfer protection, passed by unanimous vote of the California legislature and was put on the ballot and passed by 76%. So you don't see that kind of consensus very often, but that also reveals the fact that when this protection was taken away, it caught everybody by surprise. After leading up to the passage of Prop 19, about a couple weeks beforehand, as we were trying to alert all voters to this very dangerous proposal, people started to pay attention. And by the way, the county assessors have been very helpful to us, and they opposed Prop 19 as well, but it was too little too late. The campaign against us spent about $50 million, and we spent not nearly as much because we were consumed with fighting another existential threat to Proposition 13, known as the Split Roll Initiative. We successfully defeated the Split Roll Initiative again in November of 2020, but we were not successful in stopping Prop 19, which barely passed. So really wish we could have won that one as well. So as should be obvious, the state lawyers, including your fine counsel here, are on our side. Many realtors, although the California Association of Realtors was the sponsor of Prop 19, many of the local boards were very upset with the statewide organization and actually have joined us in this effort. And small businesses, as was mentioned, there was a $1 million exclusion under the old law for non-residential property. Now, it's important to point out that all we have done with this initiative, the Repeal the Death Tax, is just bring the state of the law back to where it was prior to the November 2020 election, with one exception. We did apply an inflation factor on the non-residential property aspect. So instead of $1 million, it's 2.4, which basically reflects what that exclusion would be had an inflation factor been applied to it. Also, this is not a Republican versus Democrat issue. This is not liberals versus conservatives. We have a lot of minority organizations, Asian Americans, Hispanics, the African American community, who have joined us in this coalition. A very progressive elected official from the San Francisco Bay Area, she serves on the Board of Equalization, was incensed at the passage of Prop 19 because the ability to pass along intergenerational wealth is very important to minority communities who have just only recently been able to build up intergenerational wealth. So this was a massive threat to them as well. That's what we're trying to do. We're trying to qualify this initiative. Immediately to my north is our conference room. We are packaging up petitions, getting them out, and they're coming back in a flood. We will have enough signature petitions out here to qualify this initiative, but the key is getting them filled out and brought back. We're going to have hundreds of thousands of signatures in just a few days. However, we need about 1 million valid signatures, and this is something that Susan could talk about because she's really our point person on the campaign. But very critically important that if this is an issue that is of concern to you, the ability to pass along to your children and grandchildren real property without triggering a massive reassessment from the assessor's office, then please join us and get petitions and follow the directions carefully and get them back to us by April 15th. Again, very pleased with the broad-based coalition we have. I was at an event in San Diego just last week, had a signing location at 8 different locations, and at one point we had a line of people 20 deep signing the petition. So we know that if this gets on the ballot, it will pass. We have the polling to back it up, and we also know from the experience of Prop 58 back in 1986, this is a very popular protection among property owners. But the challenge is not whether or not it can pass. The challenge is qualification. And with that, I will turn it over to Susan. Susan?
Thank you, John. Well, it is a pleasure to be here to talk to you about this really important grassroots effort to fix tax increase that was slipped past the voters. Separate from the importance of this particular issue, it is extremely important that people in California feel empowered to push back against trickery that raises taxes. And that's what this was. $50 million of advertising talking about wildfire victims moving to a new house, which was true, which is fine. But then there was this. So let me just back up for a moment and tell you why Proposition 13 passed in 1978. It was opposed by everyone in government at every level, and every trade association, every major player in California politics was opposed to Prop 13. And it passed with nearly a 2/3 vote. And the reason is that property taxes were calculated at that time, under current law at that time, as the market value of your home every year times the tax rate. And the tax rate was statewide average 2.67%. So stop for just a minute and think about paying 2.67% of the market value of your property every year as a condition of keeping it. Because if you can't pay those taxes, you're going to have to sell that house, or the tax people will sell it for you. So 2.67% of the market value in the inflation that was happening then, it was too much for people. And they were opening those tax bills and they were freaking out. And this is why Prop 13 passed. Prop 13 said that as long as you owned your property, it could not be assessed at a higher value except for 2% a year as an inflation adjustment, capped 2% a year. So you knew when you bought property what your property taxes would be for as long as you owned it. And you had stability and predictability, and you weren't forced to sell your property because of the market value rising, which is something that no one can control or predict. Very much like what we have right now. And we had this situation in 1986. The political pressure was so intense as people were inheriting property and seeing those new market values as a change of ownership triggered reassessment, and being forced to sell the family property because they could not pay the new tax bill. The pressure was so intense that the legislature passed unanimously the parent-child transfer exclusion from reassessment. A home of any value and up to $1 million of assessed value of other property could be passed from parent to child without reassessment. 10 years later, there was another proposition, 193, which said that if the children's parents were deceased, the same rules applied to grandparents passing property to grandchildren. And that also passed overwhelmingly. And now they're gone. Those protections are gone. Proposition 19 removed them and replaced them with just a very narrow exclusion, only for the primary residence, only if the inheriting child moves into it, makes it his or her primary residence within 1 year and permanently. Because when you move out, you get reassessed to market value as of the date of your transfer. So this is very narrow. It's also capped at $1 million of value. So many homes that have appreciated a lot will see a tax increase anyway. Even with the moving in within a year and staying permanently, the taxes could triple because of the inflation pushing up the price of housing in California. So this is what we're doing here. We are going to put back the parent-child transfer exclusion and the grandparent-grandchild exclusion exactly the way they were before Prop 19 changed them. We are not changing the other part of Prop 19. We're not touching the portability aspect. So you will still be able to move to a new house in any county and take your tax bill with you if you're over 55 or a wildfire victim or a severely disabled individual, and you qualify for that break. You'll be able to move to any county, take your old tax bill with you. The rest of Prop 19 stays the same. We are only changing with surgical precision this intergenerational transfer change. And it's really important, not just for homeowners, but for small business owners, because small business properties, a restaurant, a small hotel, any kind of property that people bought for income, an apartment building, a duplex, these are reassessed to market value with no exclusion, no break. What happens to the tenants when an apartment building is reassessed to market value? A long-held building in San Francisco, in Los Angeles, in Pasadena, everywhere in California. When an apartment building is reassessed to market value and the taxes go up so sharply, either the rents are going to go up, and if the rents are under rent control and can't go up, it's very likely that that building will be sold. And the new owner will not be able to make that rental housing business pencil out either. So it's very, very likely that those accommodations will be withdrawn from the market, which is a nice way of saying all the tenants get evicted. Prop 19 could wipe out affordable housing in California in one generation. Something like 40 to 50% of all the rental units in California are owned by mom and pop landlords. And when that generation passes and those buildings are reassessed, excuse me, to market value, what's going to happen? How does this help us? This has to be fixed. It has to be. So how are we fixing it? We are amending the state constitution to put back what was taken away by Prop 19. This is the petition. You can get this petition at repealthedeathtax.com, repealthedeathtax.com. You can get the petition by mail. You can pick up the petition at more and more locations. You'll be able to pick it up at the offices of this law firm just as soon as we get the post office to deliver the petitions to them. So that's important. Room for 6 signatures on each petition. There's no download option on this because state law is very picky about the margins and the font size, and we don't want the signatures to be ruled invalid because of technical factors like that. So we will mail you the physical petition. You have to have the entire text of the measure included in it. So that's the law. The law dates to 1911, and that's the law. So 6 signatures. Each petition can only have signatures from people in one county in order for it to be valid. And the reason for that is we return these petitions to the county offices to be validated against the county voter rolls. So if you write San Diego County, right here it says all signers of this petition must be registered to vote in blank county. If you write in San Diego County, then all the signers of this petition have to be registered voters in San Diego County. But you can circulate as many petitions as you like. So you can have one for San Diego County, one for Los Angeles County, one for Riverside County. You can have them on clipboards with you and you can get signatures, but just make sure that you write in the county and the registered voters who sign are in that county, and then they'll be valid. They have to sign with their residential address where they're registered to vote. If they're not sure where they're registered to vote, you can send them to the check voter registration location at the Secretary of State's website. This is our little flyer card here with bullet points on why this measure is important. And on the back, we have QR codes for easy work with people who have their phones and they're at a signature table. Our website, our donation site, our registertovote.ca.gov link. That's if people come to your signature table and they say, well, I'm not registered to vote. Well, if they're eligible, they can register to vote and then they can sign the petition. And this is the check voter registration link, voterstatus.sos.ca.gov. So if anybody ever has a question about what address they used or did they use a middle initial or any question at all about how they're registered, they can look that up at your table at the Secretary of State's website. We also have door hangers, which we've been very successful in getting out there for people. Very easy, no contact way to contact your neighbors. You can just put this on the door and let them know that this is happening and that we are going to fix it. We have our flyer here with our death tax calculator. This gets people's attention. If you put in the market value of the property, it shows you how to do the math to figure out what the taxes are going to be when that property is reassessed to market value. It's a scary number. The first year, over 5 years, over 10 years, over 20 years. So if you're doing planning for your kids and you're wondering how much money are they going to need in cash to pay the property taxes to keep the property, this tells you the numbers. And this was a change that didn't need to be made. California didn't need a tax increase. The state has an enormous surplus, and it doesn't need to be paying for firefighting on the backs of people who have just lost their parents. That's just not necessary. And the amount of money that goes into firefighting from this is very gimmicky and limited. That was really just an add-on at the very end in order to make it look more attractive on the ballot. There really isn't any money for firefighting from this measure. The Howard Jarvis Taxpayers Association is a member-supported organization. This is our newsletter, Taxing Times, which you'll get if you're a member. And you can see we're fighting to repeal the death tax. If you're not already a member, we're always recruiting new supporters. It's only $15 a year. Go to hjta.org and join us and strengthen the voice of taxpayers in California. And with that, I'm happy to take any questions.
Thank you so much, Susan. So let's take a look. We've got some questions. Let's see here. Thank you everyone for writing your questions on the Q&A chat. Okay, so we have a question. Can you please clarify the requirement again for Prop 19 that the child inheriting the home must follow?
Okay, if you inherit a primary residence, your parents' primary residence, you must move into it and make it your primary residence within 1 year and stay permanently in order to keep that low Prop 13 tax base. Otherwise, it will be reassessed to market value and you can't go back again. So you can't move out and move back. If you move out, it will be reassessed to market value as of the date that you inherited it, plus an adjustment for inflation for every year since under Prop 13. So that's the requirement. And on the non-primary residence property, the small business, the apartment building, the vacation cabin, the duplex, reassessed to market value as of the date of transfer, no exceptions.
Thank you. We have another question. If nothing changes, would it be better to pull the equity out of the house and give it to your kids and grandkids in advance?
Pull the equity out of the house with a loan, with a mortgage loan, and have the kids. You know, that's a question that I'm not qualified to answer. You should talk to an accountant and perhaps an attorney to determine your own tax situation about doing that. There might be strategies that work for some families in certain situations where that would be plausible.
Let me kind of add
I should
to
also
that.
say that a trust, I'm sorry, go ahead.
Go ahead, Susan.
I was just going to say that a trust, people frequently ask if a trust protects them from reassessment of their property, and it does not. It does not. What was protecting people all those years was the parent-child transfer exclusion, which is now gone. A trust is something that the assessors ignore. They look through it to see who the present beneficial owners of the property are. And so when there's a death and a transfer, even though it's in a trust, it is still subject to reassessment.
What I was going to add was that any questions, for example, that are, I'll call it more complex, that cannot be answered straightforward with a simple response, please call our office because we are ready to help you. Contact our office and we will then get together with you or do a Zoom call with you in order to answer any of these other questions in detail.
Okay, we have another question. It says, you mentioned that the child must live in the house forever. I was under the impression that the child must commit to live in the house for 3 years. Can you please clarify?
It is not 3 years, it is forever.
One addition to that is that if you have several children now that are going to be living in the house, one child can leave as long as there's a other child living in the house forever. In other words, so that would allow then the tax exemption to stay.
Right. But it must be their principal residence. They, you know, the change your voter right, change your driver's license, change your voter registration, change your credit card address. It must be your principal residence, however that's defined in law.
We have another question. What are the chances of getting the repeal initiative on the ballot? How are we doing with signatures?
We have more than enough signature spaces on petitions out there to qualify this measure twice. So they just have to come back. We have now 10,000 volunteers who are circulating petitions, and I think everybody's waiting till the last minute to send them back. So while we are getting a lot back, we do not yet have in our office the 25% that we need to certify to the Secretary of State when we hit that level. I think they're out there. They have to come back. So it's not too late. You can go in person to sign the petition. You can get the petition and pick it up and circulate it and drop it off. You can still have it mailed to you. There's still time for that. Go to repealthedeathtax.com. I think we can do this, but the petitions have to come back. If they're sitting on people's tables, if they're on the front seat of the car, if they're in the desk drawer, they don't do us any good. Send them back by April 15th to the Sacramento office of Howard Jarvis, or drop them off at this law firm or any of our other drop-off locations, and they'll get them back to us by April 15th in order to get this on the November 2022 ballot.
Okay, here's another question. With Prop 19 for a rental property that the parent or grandparent owns 50% and the children own the other 50%, at death, is the entire property reassessed or just the additional value?
The portion of the property that is changing ownership is reassessed. So if something is owned 50-50, a parent and a child, the parents, and the parent passes away, the parent's half of the property is reassessed to market value. So whenever there's a percentage ownership change, that's the portion that's reassessed when that ownership percentage changes.
We have another question. Does the 1 million exclusion apply to a small business owned building? For example, a small retail building owned and operated by parents?
Say that one more time.
Sure.
Does
the 1 million exclusion apply to a small business owned building that is operated by the parents?
There under Prop 19, under current law, Prop 19, there is no exclusion for income property at all. So the 1 million exclusion that was in previous law, we are changing now in our measure to 2.4 million, and it would apply to any kind of income property that's owned by the parents and transferred to the kids. So that would be any kind of business property, a restaurant, a hotel, an apartment building, or any kind of property that's not the primary residence. So a second home, a vacation cabin, up to $2.4 million of assessed value, the taxable value, not the market value, the amount that you're taxed on that's on your tax bill. You add that up for all the other properties, and the first $2.4 million of that total is excluded from reassessment when transferred from parents to children under our measure. Under current law, there's no exclusion at all for that.
We have another question. What happens if a parent passes before the bill is changed and voted on?
This is a retroactive measure. So when this passes, everyone who received a parent-child transfer reassessment will get their old assessment back again. We can't do anything about taxes that were lawfully owned in the interim. So anything that was paid in the interim, there wouldn't be a refund, but they will get their original Prop 13 protected assessment back again when this measure passes.
We have a question. If there are multiple children, do all children have to live in the house in order to have full protection from Prop 19?
No, it looked that way at the beginning, but there was some clarifying legislation passed last September, and it said that only one eligible child has to live in the house at a time in order to have the full protection of Prop 19. Only one.
Another question. Our home is currently in the trust. Is it protected against Prop 19?
It is not. Trusts do not protect you from property tax reassessment. That has always been the case. The assessors look through the trust to see who the present beneficial owners of the property are. So it does not protect you.
Okay, I have another question. If I die and my spouse, who is not an owner, continues to live in the home, per the prenup agreement, is there a tax consequence?
I think that would not be a question I could answer. That sounds like a specific situation, depending on what the prenup says. In general, there is an exclusion for spouses. So when a spouse inherits a property, there is no reassessment. That's an excluded change of ownership. But if the spouse is not inheriting the property, that's a separate question. If the children inherit the property, but the spouse continues to live in it, I believe it would be reassessed because the children are not making it their primary residence. But it depends on whether the spouse owns the property under the prenup. if there's a death. So that's a specific kind of question. Ask an attorney.
Again, any questions like this, please call our office and we'll be happy to get together with you and go through the details so that we can really provide you with the right response.
Okay. All right, we have another question. What is the difference between the HJTA Association and the foundation?
They're affiliated. The HJTA Association is a 501c4 nonprofit under the IRS code, and the foundation is a 501c3 under the IRS code. And the difference is that the donations to the 501c3, the foundation, are tax deductible, and the donations to the association are not. And they do different things. The association can do lobbying, it can do some political activity, it can operate the member services part to do services for the membership and all of the educational stuff that we do. The foundation can do our legal work and can do educational work. It can't do any lobbying, it can't do any politics. So if you're interested in making a legacy donation or a tax deductible contribution, donate to the Howard Jarvis Taxpayers Foundation. And if you're interested in supporting the work of the organization in politics, donate to the Taxpayer Association, the Howard Jarvis Taxpayers Association. And if you're interested in supporting the political campaign, that's also a different committee that's under state law, not federal law, and that's the Repeal the Death Tax Committee. So to donate to this campaign and help us pay for radio ads and all the things that we're doing, donate to Repeal the Death Tax. Make the check payable to Repeal the Death Tax or use our online donation site. Thank you for the question.
Thank you. We have another question. What happens when the parent's primary residence becomes an assisted living or memory care facility?
I don't know the answer to that. That's a very good question. If the home is no longer occupied by the owner, I'm not certain if someone goes to a memory care facility, if they can still claim their home as their primary residence. So I don't know the answer to that question. That would be a question for one of the attorneys or perhaps for the State Board of Equalization, which oversees property tax administration in California. And you can find their page with all the detailed answers to questions at BOE, Board of Equalization, BOE.ca.gov. And you'll see a big banner for Prop 19 on that page because they get a lot of questions too. And some of these answers are not clear. Some of this has not been clarified in legislation, these definitions. And the assessors have had a great deal of difficulty implementing Prop 19 because of the ambiguities. And many of the assessors are supporting our effort to repeal this death tax. So you can find our list of supporters on our website. Go to repealthedeathtax.com and you'll see a button for more information that will take you to our main site. You can see our coalition list, which is growing, and much more material with detailed answers to questions.
Thank you. We have another question. How does this affect a homeowner who doesn't have any children, but maybe has a sibling or a niece or a nephew?
Well, there never was an exclusion from reassessment for transfers between siblings or to other family members. It was just the parent-child transfer exclusion, and then later the grandparent-grandchild exclusion if the children's parents were deceased. So Prop 19 did not make any change to that. That property would have been reassessed before, and it would be reassessed under current law.
There's a companion question that was asked on another presentation that we did, and that was, do adopted children qualify as children? And the answer is yes. If they were adopted legally, that they would also be children to be qualified for the exclusion. There was another question that was asked long before.
Thank you. We have another question. Is there anything that you can do in the titling of a property to bypass Prop 19?
I don't think so.
That
If
is
you change the title,
Go ahead.
Go ahead. I'll defer to you, Robert.
I
No,
was going to
you go
say,
ahead and answer.
that's another question that requires understanding how title is currently held. Is it held, for example, in a partnership? Is it held in an LLC, or is it held as tenants in common? So this is something that, again, any of these type of questions that are more, I'll call it, very specific, detailed questions, please just call us and we will sit down with you and analyze and give you the right answer. If there is a right answer to give you, we will do so.
In general, anytime you think about changing the title to property, you should talk to an attorney and make sure you understand all the consequences, capital gains tax, income tax, anything else that's affected by a title change, as well as property tax. You should always talk to an expert before you transfer title to property in California. It's very complicated.
We have another question. How does the Federal Secure Act with the disability exclusion affect Prop 19 tax changes?
I'm not aware of that, Robert.
Yeah, let me answer that. The Secure Act primarily addresses inheritance of IRAs, and Prop 19 does not affect that. It's only inheriting property. Now, the type of exclusions that exist for the Secure Act are 5, and one of them is for a disabled child, but it's generally, the Secure Act really is addressing not real property, but it's addressing the inheritance rules of IRAs, retirement accounts. So that's really what the Secure Act addresses.
Thank you. Okay, I have another question. After a child begins to live in the inherited home, can that child move to a property of lesser value and take Prop 13 with them?
I believe so, yes. If you make it your primary residence, you keep your low tax bill, and then you would benefit from all the other parts of Prop 19 that allow portability. So yes, you could move to another home and take the low tax bill with you.
Remember that the portability, the age limit was 55.
Right, 55.
And so if the child is 21, you don't have to wait a few years in order to take advantage of the other benefits of Prop 19 for the portability aspects of it.
We have another question. What if you have a historical house and are on the Mills Act?
I don't know the answer to that. Robert, are you familiar with the Mills Act?
That I do not know the answer to. If it's a historical property that falls under a different classification, and I do not know the correct answer for that. So again, call us. We will do the research. We will find out, and we will learn with you.
You can also check the Board of Equalization website and see if they've answered that question on their ever-growing list of frequently asked questions, boe.ca.gov.
We have another good question. They're asking, who were the underwriters of Prop 19 so they can be held accountable and voted out?
Well, you can find out, you can see the voting record of this measure. This one on the ballot is a legislatively referred constitutional amendment. It was ACA 11 in the 2020 legislative year. And you can go to leginfo.legislature.ca.gov. You can go to the legislature's website, leginfo, and you can look up the votes on ACA 11 in 2020, and you can see who voted to put this on the ballot. The underwriters of the original measure, it started as an initiative with signature collection. It was backed by the California Association of Realtors, but it was really the legislature that was responsible for inserting this tax increase. They're the ones who wanted to do it. And I agree with you, hold them accountable.
Thank you. We have another question. When does Prop 19 become effective?
This part of Prop 19 became effective February 15th, 2021. So it is already effective, and we are already past the 1-year date, so that anyone who lost a parent after February 15th has come up against this 1-year decision time, whether they're going to move into a primary residence or not. And this is such a sad situation because the assessors are having to send out letters to people about this tax change and this potential enormous tax increase, just crushing tax increase when property is reassessed to market value after many years being held lower under Prop 13. The assessors are having to send out these letters. People are getting them in the mail with the sympathy cards. This is just horrible. And the
There's,
assessors don't have the staff or the systems to implement this. So it's been really a train wreck for them and for all of us.
there's one comment that I would like to make, and that is that the exclusion is not automatic. You have to file a claim for the exclusion, and then you have a time limit on that. It has to be filed within 3 years of the transfer. So, and the transfer in California, one thing that everybody needs to know is generally the date of death of the person who owned the property. Here in California, that is considered to be the date that the property is transferred. There's a lot of misinformation, or people think that, no, I didn't record the deed until a year later. They think that that is the date of transfer, and it's not. So it's important to understand that there are specific forms for the claim that has to be filed.
Right. Check with your local assessor's office for the forms if you're in this situation.
Thank you. We have another question. It says, so basically this does not allow the adult child who got the home as inheritance to ever rent out the property again? Question mark.
You can rent it. You can rent it, but you're going to be reassessed to the full market value and pay 1% of the full market value plus the local taxes and local bonds that voters have approved. You're going to have to pay that every year. So it's still your property and you can rent it, but the property taxes will not be protected at that lower Prop 13 protected level. They will skyrocket up to market value. And then from there, it will go up 2% a year with inflation under Prop 13. So it's quite an expensive decision to consider.
My suggestion to that person that asked that question is help us get the petition on the ballot, and then
you won't have to worry about it. It will be your property.
Yes, and then these problems will not be a problem anymore. The landscape will change. And so that's basically what the Howard Jarvis Association is doing. And that's why it's so important for us to be part of that fight.
We've heard from many people whose parents invested in real estate through the years. That's what they thought was a good investment. That's they chose to invest property and their earnings through the years, and they hope to leave to their kids something to help them in their lives and to pass on this intergenerational wealth, so people feel like they're working for something because it is their property. In a free country, that is your property. You set the alarm clock, you make the money, you invest it, that's your property. And to have a tax law that forces people to sell property when they don't want to sell it because they can't afford the taxes on it, that's very harsh. And to slip it through with trickery and not have an honest discussion about the consequences, I think is just unconscionable. And it's one more reason that I think we have to send a message that we are going to call them on it and fight this and fight to reverse these tricky decisions that raise people's taxes and rob families of the ability to pass on intergenerational wealth. Because if you're forced to sell a house or a business property, you're going to have the cash, but the cash is going to lose value to inflation. The asset will appreciate, but someone else is going to own the asset. And who's that going to be? It might be an investment firm in New York, and people will be just knocked out of homeownership in the middle class in California in one generation. This is really just so unnecessary and so badly thought out, and it has to be reversed. 1 million signatures by April 15th. Send them back. You have petitions on your table. Send them back to the Howard Jarvis office in Sacramento. You can find the address at repealthedeathtax.com.
We have time for just a few more questions. We have another question here. If the property is in the parents' trust can it be passed into the child's trust without issues?
The assessors look through trusts. So a trust does not protect you from property tax reassessment.
One comment on that is because of the Prop 19 problems that we saw, the question really was posed many, many times, and that is that the estate, for example, of the parent includes not only perhaps investments, but it also includes real property. And a lot of times the trust document will simply say that the estate is divided equally among 3 people, or let's say 3 children. And so what we have done is that we have encouraged our clients to come in, and we were adding a paragraph that basically put in the choice, making sure that there was a clause that said a right of first refusal, and we would say Johnny can have the first right to buy the house. If Johnny doesn't want to buy it, then Mary could buy the house, and so forth. And this kind of made the trustee aware of the necessity of having a child own the house, so that the Prop 19 rules would be presented to them. So this is something that we did for our clients, again, to ensure that the child understood under the current Prop 19. But once we go forward, I know we're going to be successful in changing this thing, then again, there's going to be a flurry of properties that are going to be wanted to be transferred, and that's going to require you to come in and talk to us, because at this time, with the ability to transfer non-residential property also, including up to the 2.4 million, it's going to be a winning situation that needed to be addressed clearly. And so that's basically what has happened.
Thank you. We have another question. What is the implication of transferring the property before the parent's death?
That will incur capital gains taxes. So I'll let Robert answer that question.
So I think that generally what will happen is they're going to lose the ability of the step up, for example, at death, as we understand it, is basically that if you have a home and the person inherits the property, there's a step up in the cost basis to equal the fair market value at the time of death. And when that is not transferred by an inheritance at date of death and it's a gift, then basically the tax base, low tax base is passed. If the property is then sold, then there's a huge capital gains tax that would incur. So the fact of transferring the property as a gift has negative consequences versus allowing the property to be transferred as an inheritance. So it's just something like Susan indicated, transfer of ownership, retitling in California is complex because all those other issues, federal estate tax has to be viewed, again, capital gains, step up in cost basis, all of that has to be evaluated properly before we change title.
And the last question we have time for, again, if we didn't get to answer your questions, please, reach out. We'd love to make sure we answer all of your questions. This last one here reads, my mom recently passed away and left a duplex property in the trust. My brother lives in one of the properties and the trust and will continue to live there until he passes away. Will the property get reassessed?
I believe the answer to that is the property will be 50% reassessed. The half of the property that he lives in, assuming there's 2 units and he lives in one and the other is rented, 50% would be protected from reassessment and 50% would be reassessed to market value. But he would have to fill out the forms. As Robert said earlier, you have to make the claim for that. And there is the exclusion. There's a cap of how much value can be excluded. So depending on how much the property has appreciated and what the taxable value is, there might be a tax increase anyway, but half the property would be reassessed.
Thank you. And that's all we have time for questions, Robert.
Okay, I'm going to then cycle again. The slide that we have there has all our communication, how you can get a hold of us. We're here to help you. And we really want to hear from you. There's about, from I'm looking at it, there's still about 100 questions that have not been answered. And we are going to be available at Cope and Barger to answer all those questions. And the one thing that I want to say is the following. It is rare that in life we get a second chance, a second bite at the apple. That is something that generally does not happen. But here, because of the work that the Howard Jarvis Association is doing, we will have a second chance to change what has happened. And on this call, there's over 300 of our clients listening. And I have a challenge for all of you. First, you sign the petition. That's one. Then I would like all of you to make a promise to yourself that you're going to go on and get 2 more signatures. So your signature plus the 2 that you're going to get will give you 3 signatures. 3 times 300 of us that are listening today, that's 900,000 signatures that we at Cope and Barger can get. And that is something that I think all of us should jump in and tell yourself, I will sign the petition, I will get 2 more, and that'll be close to 1,900,000, and to help the Howard Jarvis Association. Now, we will have in our office, or at least the physical copies of petitions. So anybody that wants to come in to sign the petitions in our office, we will have the petitions. And again, the importance of this webinar, I cannot emphasize how it's a call to action, and we all have to thank Susan and John for their job with the association, the Howard Jarvis Association. And we want to thank you from the bottom of our hearts for the fight. And we want to thank you for allowing us to be part of this fight with you. And again, thanks a million for joining us during this presentation. And thanks you so much.
It's been a pleasure. It's been a pleasure and an honor. Thank you for doing this webinar. We greatly appreciate it.
Our pleasure. Thank you, Susan.